The equities market in Nigeria is building a positive momentum today after shedding 0.1% last week, with year-to-date all-share index at 10.4%. As companies announce plans for dividend payouts, we'll find out how investors are positioning ahead. I'll be speaking to Gbolahan Ologunro, is a research analyst at Cordros Securities. Thank you so much for your time today, Gbolahan. But let's first track back a little and look at what we're seeing play out with sentiments today. You know, last week we saw some of those large cap stocks take a beating.
Yeah, good afternoon, Ken. Thank you for having me. So, like you rightly mentioned, last week we saw profit-taking activities in major bellwether stocks across sectors. We saw profit-taking in the shares of Airtel Africa in the telecommunication sector. We saw profit-taking in GTCO. We saw profit-taking activities in Seplat, in addition to Zenith as well. But for this week, market seems to have clawed back some of those losses recorded last week. Today market was up by about 8 basis points, and we expect that momentum to continue for the better part of this week. And so for this week, we think investors will be taking a close look at those stocks with attractive dividend yield, more so that there is a higher possibility that most of these companies should publish their full year 21 earnings this week, which will be accompanied with dividend declarations.
All right, let's look at some of the earnings that have been out today. I also made some announcements around their dividends here, talking about United Capital and Nigerian breweries. What do you make of those results and expectations in terms of dividends?
Yeah, we saw a very impressive performance from United Capital, with profit margin coming in at about 62%. And they were also able to pay about 150 kobo, which is a significant increase of about 114% from the 70 kobo paid prior year. And interestingly, we've seen positive reaction from the market to that strong numbers delivered by the company, and particularly with the increase in dividend. And the stock was up by about 10% today to settle at 18.2 naira. And we still expect, investors to buy the shares of this company in subsequent trading days. And at least we're looking at United Capital hitting at about 15 naira, before this week runs out. We also saw positive numbers from Nigerian business, like you mentioned, very much in tandem with what we saw from Guinness. We saw expansion in top line, and bottom line also grew significantly to about 12 billion from 7 billion the company made in the prior year. So for Nigerian breweries as well, earnings also benefited from rebounding demand from on-trade channels following the reopening of the economy in the prior year, and that was also supported by the price increments implemented by the company due to the need to also preserve margins from the impact of FX devaluation on their raw materials cost.
Now let's get into some of the performance of the sectors there. And let's start with some of the players in the oil and gas space. We've seen that sector is really doing quite well, talking about year-to-date performance, about 18% up here. Do you think this momentum can be sustained?
Yes, certainly we think that momentum will be sustained for the better part of this year. And one key player that has benefited from investors rating is Seplat, given the uptick in oil prices. We've seen oil prices breaching $90 level, and I beg your pardon. Currently at around $93 to $94 per barrel too. That has made investors to rate Seplat. And if you also look at companies in the downstream space, Total is also a company that has turned out very strong numbers. And we've seen investors also rating that company, given the improved ability of the company to push more of PMS products into the domestic market. So we expect the oil and gas sector to still remain a star performer, very much similar to what we saw in the prior year, where the sector emerged as the star performer across all sectors of the stock market.
All right, but in the medium term for the banks, though, how are you guys calling it in terms of what we can expect in terms of their earnings and how you think they will play out in the first quarter?
Yeah, so for banks, we expect broadly positive numbers across the players in the sector. And for interest income, we are still positive that with the continued stability in macro conditions, if you look at the GDP numbers for Q4, first sustained expansion in economic activities, and the economy was able to grow by 3.4% overall for 2021, and that is a significant improvement from the contraction of 1.9% in the prior year. So we expect that that should enable banks to improve their appetite in creating risk assets, which is expansion in interest income. In addition, we also expect that given the reopening of the economy in addition to improved, adoption of digital channels for traditional banking services. That should also have a positive impact on, e-banking fees, which is a key component of their non-interest income. In addition, we also expect banks to record lower impairment charges given the CBN's regulatory forbearance in terms of treatment of, exposures to stress sectors due to the impact of the pandemic. So overall, we are positive that, banks should be able to deliver decent numbers and at least maintain the payout ratio, that they declared they declared in 2020. For GTCO and Zenith, we are looking at dividend per share of 270 kobo, at the minimum, and at current levels, that still gives you a dividend yield of about, 9.9 to 10.3% based on their current market prices. So we still think, that is attractive, and investors would still, continue to take a good look at this stock in subsequent during this week.